Welcome, everybody, to the Podocast. Joe here on the KPOD network. Yes, you did tune in to the right channel. I'm usually on my own channel, Dead Cat Crypto, but now KPOD, this network, is going to be an ongoing collaboration where multiple voices will be feeding you crypto content from multiple angles. No hype at all, just the facts. We'll be straight shooting in a space that is as crooked as my nose. We at the KPod will bring you the blockchain the way we see it, the way consumers should be looking at it, and the way we are playing it. And that is exactly what I'll be delivering to you today on a silver platter as we focus on the king of all cryptos, which is, of course, Bitcoin. So grab a seat, fill your glass. Happy Friday, and let's get right to it here on the KPod network. This is going to be fun. Happy to talk to you today about Bitcoin. And I know that Scott, a couple of days ago, already gave his thesis, right? Bitcoin's a speculative asset. It goes up, it goes down. There's nothing you can do with it. It's all speculative. Well, I would strongly disagree with that because this is really the beginning of institutional and retail adoption by Bitcoin. Yes, it's great that we broke that 72, 74K resistance level. I want to zoom out a little bit today, talk about developments that I believe acted as catalyst leading up to the election. Bitcoin, price wise, it moved before Donald Trump was declared the winner. So I don't think you could pin this whole thing on the election. Maybe there's even a lot more to go in this run up to what I think is going to be over 100K. Right now, we're sitting at about 88 to 91,000, which, if anyone complains about this or continues to say to their followers that we're in a bear market, it's only a matter of time before all those crappy tokens that I told you to buy start pumping. I mean, those people are just absolute idiots. And I don't claim to be an expert trader, an expert investor, but I am going to explain to you today how I have gotten exposure over the years to Bitcoin from several different angles. Um, but yeah, this is going to be a fun one because, of course, when price is cooperating and we're surging, it's always fun, isn't it? First of all, let's talk about the elephant in the room, and that is the fact that Donald Trump has taken over. He's appointing a lot of young people to his cabinet, all these important positions. And I always believe that the fate of cryptocurrency as an industry heavily depends on the millennial generation. This is really the largest segment that's contributing to the space, whether it be programming, investing, building companies, all of that, and of course the end users. Um, Trump making a bet on the millennials in the Republican Party and outside the Republican Party, right? We got a couple outsiders that are going to be really important for his administration. And he established himself early as the Bitcoin candidate. I'm going to have a strategic reserve. I'm going to make the regulations clear. They're going to make sense when I'm in office. We're going to nurture this industry. We're not going to stifle it with unfair regulations and witch hunts into, um, with all these IRS agents looking to tax every little microtransaction. Well, let's just assume that he's going to do some of that, right? I don't think it's going to happen right away. I want to zoom out, look back at kind of how we got here, and then maybe make a judgment call as to where we're heading. Like I said, I'm not a trader. I'm not using leverage. I've been able to, over the last couple of years, get exposure to Bitcoin from all different ways, and I'm gonna show you that today. First of all, let's look at this wonderful chart. And yes, I marked it up. I'm going to show you what I did here. This is not a typical chart. This is just me kind of doodling on TradingView to make this video a little more clear and also make sure I hit everything I want to hit. So let's zoom out, right? So this is the daily chart. I've gotten rid of a lot of noise by putting this on a daily. And you could see that the last couple of months, we were just in this massive consolidation. This is really the mother of all bull flags as far as crypto goes. We bounced between, 50s and 70s for almost 6 months, maybe 7 months. And this little arrow here, this is the halvening. If you zoom out, I put the other halvening down here. So from halvening to halvening, we've basically gone from about 12K to 70K, right? And the halvening, for all intents and purposes, what does it do? It creates a supply squeeze, assuming that the demand stays the same. What happened? What happened um, since the last halvening? Let's look at it, and I'm going to show you where I put my bets, right? I said, I'm not a trader. I am trying to optimize my exposure to cryptocurrency while taking the littlest risk I could possibly take, or I should say, the most risk that I could actually tolerate. So, of course, we have direct exposure. And you could see down here, I had direct versus indirect versus leveraged exposure. These are my terms. These are not really industry terms, let's say. So direct exposure, you buy your Bitcoin, you DCA, or you buy dips, you put it in your wallet, you self custody it, and you just hodl, right? That's, to me, that's direct exposure. I also had some grayscale ETFs. I would consider that up until recently as close to direct exposure as you can get if you're not willing to, you know, sign up for a centralized exchange or self custody your tokens. So direct exposure is pretty straightforward. A lot of people now, from my timeline, have absolutely no direct exposure to Bitcoin, right? They are fading it or were fading it for a long time. But we can see that for people that have been around multiple cycles, these cycles live and die mainly by the Bitcoin halvening. And once I fully understood the Bitcoin halvening, I said, okay, I need to think in 4 year intervals, not 4 months, not even a year interval. I need to think in 4 month intervals, which means I have time. I have time to layer in to my positions, and then I have time to layer out. And you can see, let's zoom in over here. The last halvening was in May of 2020. Let's see if we can get this better. May of 2020. And then the run up began like October, November of 2020, which coincidentally was an election year. Now, if you remember correctly, August, September of 2020, we're coming out of this like COVID hysteria. Things are locked down. We're getting all kinds of stimulus. Interest rates were low. And Joe Biden, not Donald Trump, was leading in the polls. These are facts. Okay. Commodities started to move once they saw Joe Biden was leading in the polls. I didn't believe the polls. I thought there's no way Joe Biden's going to win. The Democrat governors locked everyone down. No one's happy about it. They forced us to get vaccinated and all that. Well, turns out Joe Biden won and Bitcoin went on an absolute tear. So is it election related or is it halvening related? Is it both? Is it monetary policy related? What's going on? It almost doesn't matter. The fact is something went on, right? Bitcoin went on a massive surge and we saw basically a double, triple, quadruple top with a huge dip in the middle, right? And man, this was volatility at its finest. From the halvening, it was just a slow and then soon to be exponential run up to 41,000. The previous all-time high was about 18, 19,000. Then we hit this peak 64 and then like basically a double top around 67, 69,000 with this massive volatility in between. Alt tokens were going absolutely berserk during this time. We had Ponzi schemes everywhere, whether it was Time Wonderland, Terra, whatever, right? People were loving it. Just throw caution to the wind. You can make a 50x just by sneezing at the market. Great. Then what happened? All the leverage, or I should say, most of the leverage got eliminated violently from the space, and we went through this other dip, and then people I think probably got wrecked over here if they were trying to re-enter the market or use leverage, right? We went through this long period of Bitcoin being boring. Well, for me, I was DCAing from 2022 to 2024. I used the Strike app. I was doing a daily buy of like, I don't know what I was doing, like $6, $10, something like that. I basically bought this entire thing right here. Okay. And I didn't care what the price was. I almost never looked at the price. And then I remember one day I looked and Bitcoin had dipped down below 18,000 and I had like a bunch of money in my Coinbase account. I just bought. Said, you know what? I'm bullish on Bitcoin. This is just a mind screw. I need to be in here. So I bought all this, absolutely no regrets. I'm going to wait for the next halving cycle and then I'm going to sell. Well, little did I know there were massive developments in the works related to the Bitcoin network, related to adoption, and related to actual protocols built in and around. Let's start with ordinals, right? Ordinals protocol went into effect very late 2022, which is basically the bottom, right? That's right about here. For me, as a quote unquote investor, early adopter of Bitcoin, I started buying inscriptions right around here. Okay. What did I buy? It doesn't matter. Okay. I'm getting more bullish as I realize, holy hell, Lightning Network, Ordinals Protocol, layer two side chains, people don't know what's about to hit them. And if you follow my work at all, you know that I'm 50 to 60% in Bitcoin at all times, not even counting stocks, which we will get into. So I'm buying inscriptions here. I open a Kraken account. Now I have access to stacks. I'm buying stacks here. I would call inscriptions a leveraged exposure to Bitcoin. I would call stacks and Thorchain, which is Rune, indirect exposure, maybe leveraged exposure, right? So, man, um, this is when I started really putting my foot on the gas, taking calculated risks. Inscriptions, they can go to zero, they can do a 50x, they could do a 2x. I don't care. They're probably going to either outperform the Bitcoin price by a lot or underperform it by a lot. I'm okay with taking risks because, hey, we got the halvening next year, right? Long story short, I buy stacks, I start entering runes. Bitcoin really established a floor here, like around 40,000, and there's been really no looking back. Yeah, you could follow day to day price action. Oh, I'm getting wrecked on leverage. Everybody's getting wrecked. I'm not getting wrecked. Okay. I'm not letting the market wreck me, is what I really should say. What happens right around the halvening? I get the dog airdrop, which is related to inscriptions. But the fact that I was buying inscriptions qualified for me for this airdrop. I probably spent about $2,000 on inscriptions. My dog airdrop was worth about $9,000. So boom, there's my leverage exposure to Bitcoin. And I'm still holding most of it, by the way, because I do think that with the recent development, Dog being traded on Kraken, centralized exchange exposure, I think Dog is going to be mainstream as a meme token. That's my meme token exposure as well. And if I'm going to hold meme tokens, but I'm not a trader, I'm not going to buy these meme tokens that have a lifespan of 12 to 24 hours where I really feel like I'm gambling. I don't feel like I'm gambling with meme tokens on Bitcoin. We're in this massive bull flag. What did I do? I used this time to reposition my portfolio in a way that I thought was going to maximize my gains, minimize my losses. What did I do? I basically eliminated DeFi tokens out of my repertoire. I don't know how they gain value. I'm not going to hold them. What did I do? I bought Solana, which I entered for the first time around 75, and then I bought in at 125. What else was a major addition to my portfolio? Well, I did add on to Stacks and Rune during this time. I'm no longer DCAing Bitcoin. I feel like I got in at a good price. My lifetime um, DCA for Bitcoin is probably around $20,000. And now I'm getting this indirect and leveraged exposure. Boom, the halvening comes. What's very odd about the halvening this time around was we had all time highs before. If we go back, all time highs happen. This is roughly a year after the halvening and then a year and a half after the halvening. Okay. There were other factors at play because of COVID and all that. I get it. But we, we, where this rocket ship is where the Bitcoin price started to go parabolic. We just started that now, in my opinion. So me, like the Bitcoin bull, I'm watching ETFs come in. I'm watching institutions um, MicroStrategy accumulate Bitcoin like there's no tomorrow. I wouldn't even dream of taking profits right now. And that's just me. That's my risk tolerance and my outlook, right? But back to exposure. This is not the only way that I've gotten exposure to Bitcoin. And I'm going to bring you over to another chart and we'll look at that. This is the Coinbase chart, coin, the stock. And Coinbase is the ultimate access point for individuals, businesses, and institutions into the world of crypto. And man, they have monetized every possible aspect of it to the point where I think of them as a crypto bank. When did I come up with this? Well, luckily, it was about 2 years ago because I started buying Coinbase stock into my tax free IRA accounts um, at the end of 2022, December 2022. If you zoom out, you'll see that the Coinbase stock did take an absolute beating from the IPO. And luckily, I wasn't buying back then. I started buying. This buy is December 2022, which basically coincides with the Bitcoin bottom where I said earlier there was a dip below 18K. I bought, and then a week or two later, I luckily decided to add coin to my IRA accounts. And as I rebalanced my IRA, selling some stuff, adding cash to it, I was just making buys almost all of 2023, even up until the beginning of this year, right? And what happens? I get absolutely rewarded because Coinbase goes from like the $38 entry where I first started buying, it goes up over $300, almost a 10x, which is basically unheard of in stock trading, right? You're happy to get, you know, 10, 12, 14% in a year. Well, I marked some other important events here with Coinbase because, like I said, they're an absolute gigantic player in the crypto space. And besides being a centralized exchange, that really the main one for United States customers, which, by the way, they stand to be the biggest benefactors of a favorable Trump administration crypto policy. They're in the DeFi world as well with the Base launch, and Base did launch about a year ago. There is no token, but it provides easy access. Remember, Brian Armstrong, CEO of Coinbase, he tells people self custody your assets, self custody your assets. Well, put his money where his mouth is. They launch an ETH layer 2, which has accumulated already several billion in TVL without even having their own token. I did mark the Bitcoin ETFs on this chart. I know there's really not a correlation between Bitcoin ETFs and Coinbase price. It's just super volatile. It's probably a lot more correlated to um, token prices than ETFs. But the reason why I put this here is because Coinbase is the custodian for most of these ETFs. And by the way, I did convert my grayscale funds to Bitcoin ETFs. So I have direct Bitcoin exposure in TradFi as well as in the DeFi world. Before I get off the Coinbase chart, let me just mention some of the areas that they're dabbling in that makes them this behemoth in the crypto world. I mentioned they're a centralized exchange. We all know this. That with the base launch, this provides utility for their Coinbase wallet, as well as gives them an excuse to offer wrapped assets. They do offer a wrapped Bitcoin. Um, the ease of onboarding is something else that makes me bullish. The custodial aspect of the business, which I think is only going to grow. We're going to reach a point where Coinbase, for better or for worse, is the single point of failure in crypto because they are going to be custodying a huge percentage of the Bitcoin supply, probably in the upwards of 15 to 20% in the not so distant future. This is terrible for crypto in terms of decentralization, but this is great for the coin stock, in my opinion. What else? Oh, they offer all kinds of services for small businesses, large businesses, and institutions. And of course, they have the venture capital wing, Coinbase Ventures, where they invest in crypto startups. Yes, I'm a bull. I'm a Bitcoin bull, but I got to prepare for the worst. This purple box right here is where I have set limit buys. I've taken profits on some tokens, and yes, I did cash some of it out. I also use some of it to set limit orders. I do almost all my trading via limit orders, especially if it's, you know, over like 500 bucks, 1000 bucks. I'm using limit orders. I want the price that I want. So I've set limit orders from about 54,000 all the way down to really here, 36,000. This is a little inaccurate, but I'm ready for the worst. I have Bitcoin limit orders here, and the chart, the Solana chart, I have limit orders from 135 all the way down to like 80. Got to prepare for the worst. Crypto is volatile. There are tons of these flash crashes, and I'm just placing my stable coins in places where it can help me if a given bearish scenario plays out, especially if it's a short term bearish scenario. I am prepared. So there's my Bitcoin video. You could see what I'm thinking a little bit here. Again, I'm not a trader. I'm not a definitely not a leverage trader. I'm a hodler at heart. But as I zoom out, I feel like I've taken one of the smartest, most intelligent, most long-term minded lines into my Bitcoin exposure, looking at the macro, looking at institutions, looking at what Coinbase is doing with base, looking at the industry as a whole, and the fact that protocols in and around Bitcoin are going to, in my opinion, keep as much liquidity in BTC as possible. And man, next time we'll talk about maybe why I don't believe there will be this blow off alt cycle like we've seen in years past. For the KPOD Network, I'm Joe. Hope you enjoyed this video.